As you know, rates went up last week. I'm going to cover the latest on rates and mortgage news in this video. Mortgage News Daily has conventional rates about 7.4%, FHA rates at about 6.9%. I don't normally say this, but I would look into getting an FHA loan right now so that way you can enjoy the lower interest rate and know that you're going to refinance soon. People think an FHA loan is just for first-time homebuyers, but it's not. Anyone can get an FHA loan and they have a lower down payment and lower interest rate. We got mortgage data this week, and part of that data included that mortgage applications fell. But shockingly, refinances are up. People are using their equity to pay off debt. And I know what you're thinking. Why would somebody trade a 2.5% for a 7%? It's because people are saving money every month. I've heard of a client saving over $2,000 a month and going to a higher interest rate. So refinances are taking about 30% of the market share right now. As we talked about last week, interest rates went up to the highest levels that we've seen since November of 2020. And they have come down just a little bit. But they're predicted to be very volatile because yesterday we had comments made by a Fed chair. Today another Fed chair is speaking, and a Fed member speaking can have a lot of impact on rates. We never know what they're going to say, which can drop rates, or they can say something that will send investors into a panic and will increase rates. Next week we're going to have a lot more data in the market. We're going to get the report for pending and new home sales. On Thursday, we're going to get the GDP report to see how the economy is doing. And on Friday, we're going to get the PCE report, which we're going to be watching the PCE report very closely because this is what the Fed uses to measure inflation. On Thursday, we got the report for homes that closed in the month of March, and this is down about 3.7%. But another thing that we notice is that the median home price has increased. And inventory. We have a lot more inventory than we have had in a while. But guess who's not betting on a market crash? Home Depot. They just invested $18 billion to acquire a company. This company is SRS Distribution, and they supply home builders. I know Home Depot can see the shortage in the market, and they know that new construction will continue to go up. Even though the median home price has increased, Home Depot is showing here that there is still a lot more room to go. We know that there are difficulties in this market and affordability is an issue. And there are many people sitting on the sidelines, and I understand rates are high. But all I'm saying is don't wait too long. When rates pull back, be ready, like Home Depot. If you cannot wait and want to start to take advantage of building equity, more inventory in the market, and not paying over asking with all the competition, let's talk about how you can become a homeowner. I'm licensed in all 50 states and would love to help you. We got a report last week that showed first-time home buyers have about 32% of the market right now. We can see this increase due to better weather. Spring is a time where inventory is up and buyers are out and shopping. This is normally the time of the highest activity. If you're wondering how your local market is doing, I have some data for you. Get in touch. My link is in the bio. Call, text, or email. I would love to get your personalized one-page report of your area. Another report that came out yesterday was the jobless claims report. This measures people who are applying to receive unemployment, and these numbers stayed about the same. So the numbers that came out on unemployment are going to be next month's jobs numbers. And since we didn't see that big of a change in jobs, we're not expecting that to change the market next month when the jobs report comes out. So what does all this data mean for you in the housing market right now? It means that interest rates are up, but so is inventory. Higher rates push out the competition. We know that rates will change, we just don't know when. I hear a lot of people talking about how unaffordable things are, but people are spending a lot of money. We got a retail report from last week, and it's showing it was much higher than expected. It's showing that consumers are continuing to buy and not affected by the higher prices. But the data is showing that people are using borrowed money. That could be one of the reasons that refinances are up 30%. We will continue to watch consumer spending because that's what's going to make the biggest difference in inflation. Thank you so much for watching. I'm asking for your help with my channel. Share this content with someone you know that has questions about the market. Be sure to like, comment, and subscribe if you haven't already. Hope you have a great weekend, and we'll see you next week.